The Fed raised rates and the November market stats are in. You're definitely going to want to watch this one. So the Fed raised rates 50 basis points last week. Obviously big news. And everyone also wants to know what's going on in the market. And these two things are correlated. What the Fed does can affect consumer sentiment, and buyers and sellers obviously want to make really well-informed decisions and try to see what's going to happen in the market in the future, whether it's now or sometime in 2023. So I'm going to unpack it all. Let's start with the market data first for Chester, Delaware, Montgomery counties, as well as Philadelphia, and then we'll jump into how the Fed's decision could impact those housing decisions that may be coming up in 2023. So first off, the number of sales are down through the month of November, year over year, in all four counties, between 10.8 up to 20.6%. This is not surprising because in 2021, the number of homes that sold was over 18% higher than the historical average. So it's not going to stay there forever. Historical averages are there for a reason. It gives us a baseline what the market does over time, and right now we're about 1-2% off that historical average because we were 18% above last year. So not surprising, not alarming at all, another sign of a normal market. Home prices in Philadelphia were up 2.7% on the median year over year, and in Chester, Delaware, Montgomery counties, they're up 8.5 to 10% year over year. So prices aren't going down. The market's not crashing. We're just seeing a normalized sales pace that feels slow compared to the last 2 years in 2020 and 2021. Days on market is ranging from 18 to 20 in the suburban counties year over year, and in Philadelphia, we're seeing a 37 days on market average. That's really fast. Back in 2014, 2015, 2016, the average range was between 45 and 60. So it tells me demand is still there and homes are still selling quickly. We're also seeing a decline in the number of new homes getting listed, down 14.3 to 24.3% in the suburban counties and down 3.5% in the city of Philadelphia. So we're still seeing less new homes coming on the market. The positive here is homes are sitting on the market longer. There's more options for buyers now because if you look at what's happened with inventory in the suburban counties, it's risen to a 1.45 to 1.55 month supply. Earlier in the year, we were talking about less than a month supply of homes available. So we've seen that jump up to about 1.5 across the board in Chester, Delaware, Montgomery counties. And in Philadelphia, we're seeing a 5.05 month supply. So obviously, Philadelphia is very diverse, a lot of different neighborhoods. So that's going to vary from neighborhood to neighborhood. In terms of what sellers are getting for their home, we're seeing year-to-date numbers of 101 to 102.5% in the suburban counties and 96.5% of the asking price in Philadelphia. So that's where the home is priced when it goes under contract. What we're seeing for the month of November, and you can see the market's changing a little bit here. Through the month of November, the suburban counties were averaging 98.9 to 99.8% of the asking price for the final sale price and 93.9% for the city of Philadelphia. So we're seeing that number come down a little bit. I'll explain what that means next. This is very important for buyers. You want to pay attention to that stat. And obviously, the last thing that's happened is we've seen rates come in that like 6.375 to 6.5% range as of today when we're filming this. And that's based on what's happened with the Fed raising rates, the CPI data, all sorts of things we're going to break down next. So what does this all mean for sellers and for buyers? So if I was a seller, I'd be paying attention to three statistics here. We know prices are going up. That's fine. That's good. No change expected with the incline of prices at a normal historical rate. I would think anywhere from 2 to 5% is what you can expect over the next year. What I'd be looking at is you're not seeing the average list to sales price crest over 100% anymore for the month of November. It's still there for the year, but we're not seeing it crest over the asking price anymore for the month of November. That tells me I'd be pricing my home right where I think it's going to sell and be aware of segments in the market. People look up to certain price points, talk to your local agent, find out what those price points are. This is very important because when you overprice your home, it sits on the market and you're seeing buyers aren't paying over the asking price on average for the 4-county area for the month of November. That's just what the data says, and the data will tell you what to do. I'd also be looking at how days on market is starting to climb. Earlier in the year, we saw like a 15 to 17 day range in the suburban counties and about a 30-day range in Philadelphia. That's obviously up. And most importantly, inventory starting to climb. And earlier in the year, we saw less than a month's supply in the suburbs. Now it's up to a 1.5 month supply. That's a big change. You're talking about literally a 50% increase in available homes from May, June, July, if you go back and look at the previous episodes. And in Philadelphia, obviously that's much higher. So that tells me more homes are coming to the market. When there's more competition, you're not positioned as favorably for a seller. Prices are still going up. You're not seeing those incredible bidding wars that we saw in 2021. So you want to be mindful where you're pricing your home, and obviously days on market is climbing. So if I'm a seller and I'm thinking about selling next year, I'm having those meetings right now. Who cares if it's the holiday coming up? There's plenty of time off to talk to an agent about what your plans are for next year, and I'd be having that exact conversation. For buyers, this is what you've been waiting for. Rates are down from north of 7. They've come down into the mid-6s. So your monthly payment just went down on the same priced home. Secondly, days on market starting to increase a little bit. Homes aren't selling above the asking price all the time, and inventory is increasing. So these are all the things buyers have not been happy about with the market, and that tells me this is your opportunity to get into the market before everyone wakes up and realizes this shift is happening. So again, I'd be having strategy sessions, planning meetings, finding a good time to go over my goals with an agent for a buyer or seller, because the stats are telling us the market's going the other way. The data always tells the story. I don't care what your opinion is, the facts matter, and that's what I'm sharing here. Lastly, what's the Fed impact here? So the Fed met last week. They raised rates 50 basis points down from their 75 basis point increase that was happening throughout the summer into the fall. Federal Reserve Chairman Jerome Powell came out and said, we're going to keep raising rates. We're going to still target inflation. They're not changing their strategy here. The positive here is that even though the Fed increased rates, we've seen mortgage rates come down because inflation data is coming in lower than expected. The CPI data, the Consumer Price Index, which is basically the cost of goods that you're buying, so food, gas, holiday presents, whatever, that's the average cost of those. That number came in lower than expected. And as long as inflation continues to soften, we're going to see the Fed pull back from this rate hike strategy. And most importantly, the market's reacted favorably, and we've seen rates come down. And if this continues, I'd imagine we see even lower rates as we get into 2023. So I just gave you a ton of information. Your head may be spinning right now. That's okay. What I'd encourage everyone to do is you've got to get a local expert who can unpack this for you and show you what it all means. How to estimate the price of your home. How to navigate this if you're a buyer. Get a local expert to talk to you about the local data in your marketplace, because this is going to vary from neighborhood to neighborhood, school district to school district, township to township. A lot to unpack here, and there's a lot of money at stake. Make sure you get the right person in your corner helping you navigate it. You're definitely going to want to watch this one.